When you give your money to a bank, you know it's not just sitting there, right? Of course, they may loan it out, make some profit on the fees. Have you ever wondered realistically, what do banks do with your money when you give it to them? What if I told you they buy life insurance? It's called BOLI, bank-owned life insurance. And check this out, the top 5 banks in the US own over $50 billion of it, with a B. Bank of America has over 20 billion of it. Chase has more than 10 billion of it. PNC has it. Truist, Wells Fargo, they all have some bank-owned life insurance. These numbers come straight from the FDIC public records. And this isn't some secret sauce. It's just something they don't advertise. Why? Because banks know something most people don't know. Life insurance, when structured the right way, grows tax deferred. You can access the money tax-free and never loses money, according to policy guarantees, not the stock market. So if the biggest banks in America are all buying life insurance, maybe it's time you looked at it. In this video, I'll break down exactly how it works, why the biggest financial institutions use it, and how you can use the same strategy to protect your family and build tax-free wealth, just like they do. And if you stay with me to the end, I've got something for free that'll show you exactly how to flip it for yourself. So let's flip the script. Why do banks do it? So why would a bank, with all their investments, all of their fancy skyscraper money, I mean, they put their names on stadiums, arenas, all across the US. Why would they invest billions of dollars into life insurance? Basically, it's like having their money chill at an all-inclusive resort. BOLI gives them guaranteed growth, tax-free compounding, and protection against market losses. Meanwhile, the average person keeps their money in a savings account, earning less than 0.5% interest. That's not savings. That's a shoebox. And just to be clear, everything here is for educational purposes only. I'm not telling you where to put your money. I'm just showing you how the banks play the game. So here's the key takeaway. Banks use life insurance because it gives them what we all want: safety, steady returns, and tax-free benefits. Now, before you think this is that old school, just for a funeral policy, it's not. Respectfully, cash value insurance is twofold. On one part, it protects your family in case life goes sideways. On the other hand, it grows cash value, and you can use that money while you're alive. The two main types you hear about is whole life, which is safe, steady, and has some guarantees. And the other is index universal life, or IUL. Get the market ups with none of the market downs. Both build cash value, both grow tax deferred, and both you can access the money tax-free if you manage it correctly. When the market goes down, your money just chills. No panic, no stress, no chaos. Protection you can use while you're alive. So here's where it gets real and people's eyes open up. With modern policies, they don't just protect you when you're gone. They protect you while you're still here. They call them living benefits. So if you get sick, you get injured, or you can't work, instead of draining your savings, your policy can actually step in and replace your income for you. And look, just go check GoFundMe. The top 2 categories are medical and burials. This is where too many families end up when they don't have something in place. I've seen it play out with real people, and the difference between panic and peace always comes down to one thing: a plan. Growth without the gamble. So let's talk about growth, because we all want our money to grow, right? Most people are on a financial seesaw that they have no control over. And I love rides. I love roller coasters, just not with my money. The market goes up, you feel great. The market crashes, you're stressed out trying to figure out what happened. Whether it's with whole life dividends or with IUL interest. When designed properly, your money goes tax deferred and protected from market losses. Billionaire Warren Buffett has 2 rules. Rule number 1, never lose money. Rule number 2, never forget rule number 1. This is the same philosophy banks use with their BOLI. Slow, steady, safe returns. No casinos, no gambling. Predictable, compounding growth that builds wealth the real way, quietly. The tax game. Just when you finally get ahead, boom, here comes Uncle Sammy from Miami with his hand out. Let me hold something. That's the low-key silent hustler. You don't see it day to day, but over time, it takes a chunk out of everything you work so hard to build. Cash value insurance flips that. You get a triple tax advantage. It grows tax deferred, you can access the money tax-free, and when something happens to you, it passes on to your family tax-free. That means the IRS gets away, but not your wallet. Here's what most people don't know. This can actually become a part of your retirement. Now, not every policy or person qualifies the same. And this is when customization matters. What I'm about to show you is how the structure works, not a guarantee of your actual results. Over time, your cash value quietly builds up and you can live off the interest like a lifetime snack. No market swings, no guessing, no more roller coasters. While everyone else is refreshing their stock apps on their phone, you can wake up at the beach knowing that you got more money today than you did yesterday because you got paid in your sleep. So how does it work? Let's just keep it simple. You pay into the policy, a part of it goes towards insurance, the other part of it builds cash value. That money compounds over time and becomes your own personal bank. You can use it to pay off debt, start a business, buy properties, do real estate, whatever your goals are. Even as you use your money, it continues to grow and compound in the background like you never even touched it. What other asset does that? So why does this work? This strategy works because logically it's numbers. It's just math. But on the emotional side, what it does is it gives you something that most people don't have. Money control. You're not dependent on Wall Street, you're not dependent on Congress, you're not dependent on a bank to try to qualify for a loan. You become your own bank. And when you have that type of confidence, that's priceless. Now you're seeing how the strategy really works. By the way, this isn't financial advice. This is not a one-size-fits-all solution. This is just so you can make a more informed decision. You see how it protects, grows, and keeps more of your money working for you. So the next step is simple, seeing if it makes sense for your situation. Just call for clarity. Message me or call at 321-424-8341. If you made it this far, respect. Most people tap out because this stuff isn't sexy, but it works. For sticking with me, I want to give you something real. My ebook, Flip the Script, Do What the Banks Do. It's interactive, real stories, reflection prompts, and quick quizzes to show you how the system moves your money so you can know how to flip the script for yourself. Hit the link below and grab your copy for free so you can do what they do because the system's been winning long enough. It's your family's turn.